Good morning and welcome to today's episode of our daily crypto news podcast. I'm joined by my co-host and we've got a packed show for you today covering everything from blockchain security to the world of gaming and NFT.
That's right, and we're starting with some exciting news for fans of the popular Telegram game Hamster Combat. The game has released its daily combo and cipher codes for Tuesday, February 18, offering players a chance to earn in-game rewards.
For those who may not be familiar, Hamster Combat Game Dev Heroes is a Telegram-based game that launched its own crypto token on the open network. The game gained massive popularity last year, reaching over 300 million players ahead of its token launch.
And it's not hard to see why. The game's unique blend of gaming and crypto has clearly resonated with players. And with daily opportunities like these combo and cipher codes, players have even more chances to engage with the game and earn rewards.
Now, let's switch gears to some bigger news in the world of blockchain security. Blockchain security firm Blockaid has just announced a $50 million Series B funding round led by Ribbit Capital and featuring participation from GV and existing investors.
This is a significant investment, and it's clear that Blockaid is positioning itself to be a major player in the blockchain security space. With the funding, the company plans to scale its operations and tackle the growing threat of on-chain attacks.
And that's a crucial point. As blockchain adoption accelerates, the need for robust security measures is becoming increasingly important. Blockaid's technology has already scanned over 2.4 million smart contracts, identifying potential vulnerabilities and helping to prevent attacks.
So it's clear that Blockaid is doing some vital work in this space, and with this new funding, the company is poised to take its mission to the next level. We'll be keeping a close eye on this story and exploring the implications of blockchain security in more depth throughout the episode.
And that's just the beginning. We've got a lot more to cover today, from market trends to NFT news and more. So stay tuned and let's dive in.
As we were just discussing, the cryptocurrency space is still reeling from the aftermath of several high-profile collapses. It's no surprise that regulators are starting to crack down on suspicious activities. In fact, we've got a new development out of Norway that highlights the importance of due diligence when investing in crypto.
That's right. According to reports, Norway has charged 4 individuals with involvement in a massive investment fraud scheme that netted over $87 million from unsuspecting investors between 2015 and 2018.
Building on what we discussed earlier about the need for transparency and accountability, it's clear that authorities are taking a closer look at these types of operations. The indictment alleges that the scheme operated by promoting yield-bearing products to investors, which sounds eerily familiar to some of the other cases we've covered recently.
Exactly. This case serves as a reminder that investors need to be cautious when dealing with any investment opportunity that promises unusually high returns. It's always important to do your own research and verify the legitimacy of the operation before handing over any funds.
Speaking of market volatility, it looks like Bitcoin is experiencing a bit of a downturn. The price has dipped below $95,000, marking its lowest point in weeks. Other major assets like Solana, Dogecoin, and XRP are also leading losses among the top 10 coins.
Yes, it's not a great day for crypto markets. While the 1.5% daily drop for Bitcoin isn't a massive swing, it does indicate a general trend of bearish sentiment. And when you look at the performance of other coins like Solana, which is down significantly, it's clear that investors are getting spooked.
What's interesting is that this downturn is happening despite some of the positive developments we've seen in the space recently. It just goes to show that the crypto market is still highly unpredictable and subject to sudden swings in sentiment.
That's right. As we've said before, investing in crypto requires a high degree of risk tolerance and a willingness to weather the ups and downs. It's not for the faint of heart, and it's essential to stay informed and adapt to changing market conditions.
Well, we'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, it's crucial for investors to remain vigilant and take steps to protect their assets.
Absolutely. And as always, we recommend doing your own research, staying informed, and consulting with financial experts before making any investment decisions.
We were just discussing the increasing regulatory scrutiny on the crypto industry, and it seems like Australia is taking a firm stance. The Australian Transaction Reports and Analysis Centre, or AUSTRAC, has taken regulatory action against 13 crypto firms due to compliance failures within the digital currency sector.
That's right. This move is part of a year-long investigation into remittance and digital currency exchanges. What's striking is that Austrac has identified over 50 additional firms that are under scrutiny for potential violations. This suggests a much broader crackdown on non-compliant crypto businesses in the country.
Absolutely. It's clear that regulators are getting serious about enforcing anti-money laundering and know your customer regulations. We've seen similar actions taken by regulators in the US and Europe, and it's likely that this trend will continue. Crypto firms need to take compliance seriously if they want to avoid fines and reputational damage.
Speaking of reputational damage, let's take a look at the markets. We've seen some significant price movements in the past 24 hours, particularly with Sol sinking further by 7.46%. What's driving this decline, and is it related to the broader market trends we're seeing?
Well, Sol's decline is likely due to a combination of factors, including the overall market downturn and some specific challenges facing the Solana ecosystem. We've also seen some high-profile departures, including the co-founder of Meteora, which could be contributing to the negative sentiment around Sol.
That's a good point. The departure of key team members can often be a red flag for investors, especially in the crypto space where trust and confidence are crucial. On a more positive note, we've seen some exciting developments in the world of decentralized finance, including the launch of Hyperliquid Mainnet. What can you tell us about this project?
Hyperliquid Mainnet is a new decentralized exchange that promises to bring high-performance trading to the DeFi space. With the ability to process thousands of transactions per second, Hyperliquid is positioning itself as a major player in the DeFi ecosystem. It's worth keeping an eye on this project, especially as the demand for fast and secure trading solutions continues to grow.
Building on what we discussed earlier about regulatory scrutiny, it's interesting to note that projects like Hyperliquid are pushing the boundaries of what's possible in the DeFi space. As regulators crack down on non-compliant crypto firms, we may see more emphasis on decentralized solutions that can operate outside of traditional regulatory framework.
That's a fascinating point. The tension between regulatory compliance and decentralized innovation is likely to continue in the coming months. We'll be keeping a close eye on developments in this space and bringing you updates as more information becomes available.
We just discussed the growing trend of sustainable energy sources being used in the crypto mining space. Building on what we discussed earlier, there's been a significant development in this area.
That's right. Mara Holdings has just closed a deal to acquire a wind farm in Texas. This move is expected to add 114 megawatts of wind capacity to their asset base, further expanding their presence in the energy infrastructure sector.
This is a strategic move, considering the increasing focus on sustainability in the crypto industry. By acquiring this wind farm, Mara Holdings can power some of its Bitcoin mining operations with renewable energy, reducing their carbon footprint.
Exactly. And what's interesting is that they'll be using last generation ASIC mining hardware powered by this wind energy. This approach not only reduces their environmental impact, but also helps to extend the life of their mining equipment.
Speaking of strategic moves, there's been a disturbing development in the FTX claims process. A recent report suggests that an AI-powered fake may have scammed firms for millions of dollars in FTX claims.
Yes, that's right. Analytics company Inca Digital has been tracking a shadowy figure who allegedly cheated trading firms out of more than $5 million in claims from the liquidation of the FTX exchange. The use of AI to perpetrate this scam is particularly concerning.
It's alarming to see how scammers are leveraging advanced technology to exploit the vulnerabilities in the claims process. This highlights the need for increased vigilance and robust security measures to prevent such incidents in the future.
Absolutely. And it's not just about the financial losses, it's also about the erosion of trust in the system. If firms can't rely on the integrity of the claims process, it can have far-reaching consequences for the entire industry.
Inca Digital's efforts to track down the scammer and bring them to justice are commendable. It's essential that we see more collaboration between companies and law enforcement agencies to combat such malicious activities.
As the crypto space continues to evolve, it's crucial that we prioritize transparency, security, and accountability. By doing so, we can build a more resilient and trustworthy ecosystem that benefits everyone involved.
I think it's interesting that Mastercard is now shifting its focus towards real solutions in the crypto space. We've been seeing this trend of big companies experimenting with blockchain and cryptocurrencies, but now it's time to put those experiments into practice.
Exactly. And it's not just about experimentation anymore. As Raj Damodaran, Mastercard's head of crypto and blockchain, mentioned, one of the main challenges is making it easy for consumers to find each other using what they already know. It's about creating a seamless user experience.
That makes sense. And I think we can tie this back to our earlier discussion about adoption rates and how to get more people into crypto. If big companies like Mastercard can make it more accessible and user-friendly, that could be a game changer.
Definitely. And speaking of game changers, the news about FTX's initial $1.2 billion payout process to creditors is also worth discussing. It's been a long and complicated process, but it's good to see that creditors are finally starting to receive their payouts.
Yeah, and it's interesting to see that creditors with claims below $50,000 have started receiving payouts with 9% interest since November 2022. That's a significant amount of money, and it's expected that they'll receive roughly 119% of their adjudicated claim value.
That's right, and I think this is a good reminder that even in the midst of all the chaos and uncertainty in the crypto market, there are still mechanisms in place to protect creditors and ensure that they get what they're owed.
Exactly. And I think that's a good note to end on. As we wrap up today's show, what are your key takeaways from the day's stories?
Well, I think the big theme that emerged today is the idea of progress and momentum in the crypto space. Whether it's Mastercard moving beyond experimentation or FTX's payout process getting underway, it's clear that things are moving forward.
I agree. And in terms of market outlook, I think we can expect to see more of this progress and momentum in the coming weeks and months as big companies continue to invest in crypto and blockchain. And as regulatory frameworks become clearer, I think we'll start to see more mainstream adoption and growth.
That's right. And as always, we'll be here to bring you the latest news and analysis as it happens. Thanks for tuning in to today's show.
Thanks for listening, and we'll catch you all tomorrow.